Supply and demand, the concept at the very core of the financial markets. Mastering this will allow you to take great trades consistently and build a thriving career in trading. So cut off all distractions. In the next 10 minutes, I'm going to show you everything you need to know to master supply and demand trading. What is supply and demand? Supply refers to the amount of sellers in a market, and demand refers to the amount of buyers. Market prices are driven by the battle between buyers and sellers. When there's more selling than buying, high supply, then the markets move lower. And when there's more buying than selling, high demand, then markets move higher. The battle between supply and demand is quite literally why the markets move. With good news and positive developments for a currency, more people want to buy, and as a result, there's more demand and market prices go up. The same is true for bad news, where traders react by selling off the assets that they have and by losing interest in buying more. This results in an increase in supply and a decrease in demand, and as a result, the markets fall lower. On paper, this is an interesting concept, but how exactly can you use it on the charts to improve your trading results? By reading the supply and demand of a market in real time using zones. To find a supply or demand zone, we want to identify an area of consolidation, sideways price action, before a large up or down move. A demand zone is a consolidation before a big upward move, and a supply zone is consolidation before a big downward move. These zones are areas where large amounts of buying or selling has taken place in the past, and they can be used to take high probability, high reward trades in the future. Here's an example. By looking at this chart, we can clearly see there was a demand zone here, which was an area where a large amount of buying took place. We know that traders see this price as a discounted price to buy this asset. So we can then assume if the market returns to this price once again, traders will be happy to buy here again because it's a fair price to purchase contracts at. So what we would do is avoid buying until price hits the zone, and then focus our efforts on securing an entry inside of the demand zone. Stop losses would simply be placed below the zone, and if the zone doesn't hold, it tells us the market is reversing, and the best thing we can do in that scenario is cut the loss short and get out. The same theory applies to supply zones, but instead of looking to buy, we would look to sell. Now this is important, so listen up. When you look at a chart, you'll realize there are seemingly supply and demand zones everywhere. At the top and bottom of every single move, you're going to see a small consolidation. Obviously, buying or selling a retest of every single zone is not going to work out well. You'll take a massive amount of losses and explode your trading account very quickly. So to avoid that, we want to make sure we're always trading with the trend. So when a market is trending up, we should focus on buying demand zones and totally ignore supply zones. And when a market is trending down, we should sell from supply zones and ignore the demand zones that form within the trend. And to determine the direction of a trend, we can just read the highs and lows in price action. A market that is consistently forming higher highs and higher lows is in an uptrend, and a market that is consistently forming lower lows and lower highs is in a downtrend. If you need to learn more about market structure, click the card in the top corner of this video to watch my class about that concept. Buy demand in uptrends and sell supply in downtrends. And if you break this all-important rule, you will go broke fast, so don't forget it. Another important thing to note is that supply and demand zones are only good one time. When a zone has been retested once, it is written off. So if the retest results in a huge move, awesome. But if the market slumps back down and hits the zone a second or third time, it shows us that the buying is not as strong as anticipated, and it's likely that the zone will break instead of holding up. So only consider buying or selling from demand zones or supply zones that haven't been retested yet. If a zone has already been hit, don't go buying on a second or third tap. It won't work out well for you. So now you know how to find supply and demand zones and how to use them for getting into trades. You also know you should be trading them with the trend. But supply and demand has another use too: targets. We can use open supply and demand zones as targets for the trades that we take. And to explain this, it's best to just show you an example. So for this example trade, we're looking at a buy from this demand zone in this predominant uptrend. Now we can use supply and demand zones as targets, and this is how we do it. Obviously, if we know we're in an uptrend, we want to only buy from demand. That is what we're going to focus on. However, if we're expecting the market to go up, we can actually use a supply zone as a safe target for our trade. Now, we could use this one here. We have this imbalanced range. We have this clear supply at the top. And we know that with the market reversal, it's likely we get to this point. However, the smaller range in price action is actually bearish at the moment. So the big picture is bullish, but this smaller picture is bearish, meaning we know this supply zone could potentially form a reaction when we get to it. So what we could do is use this supply as the target for our trade, get out, and then assess what the market does later. And as you can see, after reacting from this supply, we did have quite quite a large bearish move. So it's often a good idea to use supply zones as targets for buys when you're buying from demand. And on the flip side, if you're using supply to sell the market, demand zones can be a very good place to target to get out of your trade safely before market reversals. To round off this class, I want to show you a trade I took from start to finish using the concept of supply and demand so that you can see how all the elements I've covered so far come together. So for this example trade, we're going to look at quite an old trade from 2023. But this is a really clear, simple example and a great first introduction to the concept of supply and demand. So what we have is a predominant uptrend in the market, and then we saw the market reverse and trade down towards this demand zone just here. So now we have an uptrend and we know we want to buy from demand and ignore supply zones for the most part because we are trending upwards. Now, after this retest, we had a push up, we had a break of structure, and we left open at this low another demand zone. You can see it's a consolidation move before the upward move, and also consolidation can be seen, as we see here in individual candles, as kind of consolidation candles with large wicks that show essentially a lower time frame consolidation. So what we can do now is look for a buy from this demand because we have a clear demand zone in a clear uptrend. As we covered before, we can put our stop loss under the low, and then for targets, what could we target? Well, we could target the supply zone at the top of this move. This supply zone is very likely to be filled considering we're in an uptrend, and if it does form a reaction, we will be able to secure over 10% in profits from where we are here all the way up to this supply zone. So we can place an order just here, and then we can allow the market to play out. And as you will see, this trade was filled very precisely from the demand, and then we had a very nice quick upward move all the way towards that supply zone. So I took this trade and I made around 11% on this, and yes, it's an old trade, but the concepts stand true, and I'm showing you this one because it's a very clean example for your first introduction to supply and demand. And there you have it, supply and demand, the concept at the very heart of the market, and the strategies that you can use to successfully trade with supply and demand at the core of your strategy. It's simple, effective, and grounded in logic. And it's a concept that will never get old or die, because the endless battle between buyers and selling, between demand and supply, is literally why the markets move. Now, if you enjoyed that, hit the link in the description and you'll be taken to my free course. It's going to break down 10 reasons why you're not winning and how you can turn your results around. And by the way, depending when you're watching this video, I have a 50% promo on my trading mastermind. So if you want to get a full comprehensive education and work with me to put your strategies into action in the markets every day, then hit the mastermind link in the description and join us on the inside. Now, get to work on breaking down supply and demand in the markets. I hope it brings the same success to you that it brought to me. That's all from me. I'll see you in the next video.